Great morning. Hope you are well. We are an hour early today. So those that are joining us that are not normally able to, so glad that you're here. Those that are able to make it to the live, thank you. Truth is, I have to, I have to, I have to head to a funeral, and I mean because of that, you know, I'm gonna try my best to be. Here we are. There's a lot I wanted to share with you today, and the theme is obviously that the Fed is going to be easing into a bubble. And question came up just earlier this morning. Without the Fed easing aspect, right? Take that away for 1 second. Would a reacceleration, because we're talking about next 3 to months, it seems that the narrative is going to become that actually we're seeing a reacceleration. You can see it over here this morning. This is a post from yesterday. Good morning, economic reacceleration bros, pointing to the gain in the private employment numbers, pointing to the ISM entering the ISM services entering into expansion. Employment is still below 50, but ticking up. And then, of course, we have ISM services price index and service new orders, all showing or leading to what looks like, yes, indeed, we are headed towards a reacceleration. And, that is, of course, in conjunction with the Fed now beginning to pivot its policy from that stopping quantitative tightening, which is easing further, right? They already, like last September, they had a 50 basis point reduction in the overnight Fed funds. Again, this year so far, we've had a 50% reduction, 225 basis points cuts. And it's on the table whether or not we're going to have another one this year. Powell kind of subdued those expectations right over here at the very top and kept it more or less an open meeting. And, well played, appropriately played. And I think that I had that cautiousness. I had the Bears in the background for weeks leading up until then. And I had that for sure backwards. Now we have some problems without the reacceleration. We are seeing that this is true inflation, right? We know that right now the way that the government goes about measuring inflation, it's just above 3%, about 3%. We have now true inflation ticking up strongly over the last couple of months, and this is I believe it's largely has to do with utilities, right? And again, energy though, oil is still subdued, sub 70. If that were in a reacceleration phase, begin to move on up, that could become a big problem. Inflation could become a big problem a lot quicker. And then, of course, we have things like the data centers. Is this what's causing people's utilities to rise? This great question came up. I have to, and I want to. Oh, good. I have this over the stream. Um, would a reacceleration outside of the Fed easing into a bubble, would that cause further inflation? Right now, it's not such an easy question to answer, and so I'm gonna go ahead and cover all different sides of the story. And so, looking at the 2 and 10, though, one thing's different, and what's different is that normally when you see a reversion of the yield curve, it is very quick. So this is on the reversion right here, and like immediate recession. This is a reversion right here, immediate recession. Here's a reversion, and this took about 90 days, and then recession. And then over here as well, you had the reversion. This was a bit of a lag over here. So you had the reversion over here, and then there was 240 days or 200 days uh, until the recession. And obviously that was an anomaly, a weird one of the shortest recessions, if not the shortest on period. But this one's different. We've had the reversion now, and we're on, 300 days and no recession. And that, what's different? well, we know this time is much the same as the last time, but what's different is now we're looking at monetary policy not being the driver, and it is fiscal dominance. By the way, I have to share with you really quick, otherwise I'll forget. Interesting that we know that the TGA raised significant funds. They put up, a mere $200 billion of short term, but look at this. They've now started moving towards longer duration, 25 billion on the 30 year, and looking to so that's an interesting change of approach. Remember when Trump was like, no, do not issue anything over 10 years again, and clearly they're going that route right now. So let me just jump back and weave in this. And so the question is the thoughts on OpenAI wanting a backstop and stating they are too big to fail. This is an interview that I brought up one time. This is with Leopold, and this is a year ago, and everything he said so far from a year ago in this interview, he's an ex OpenAI employee, and basically, it seems that he was let go due to ethics. Like his ethics did not align with OpenAI's, and he went on and raised $1 billion, started a fund, and is heavily invested in the sector. And a year, like, follow those at least with, as a history of those who get it right. Do I still have the message up? No, good. And in the past year, everything he said so far has come to for his intelligence is off the board. I can't even imagine what his IQ is. If you I'll put it in the messages over here if you listen to this interview, and his intelligence is off through the roof, as well as the way that he processes information is unbelievable. But a year ago, he's saying that what's going to happen is eventually, and this is like 30 seconds. Let me start here.
It is sort of that speed that creates, I think basically the way I think about it is there's going to be this initial, just incredibly volatile, incredibly dangerous period. And somehow we have to make it through that. And that's going to be incredibly challenging. That's where you need the kind of government project. If you can make it through that, then you kind of go to like, now the situation has been stabilized. We don't face this imminent national security threat. It's like, yes, there were kind of WMDs that came along the way.
So, and without getting into detail, a year ago, he's talking about that basically what's going to need to happen is that the U.S. government is going to need to come in and backstop. Now, I don't know if that was because of conversations he's had while working at OpenAI prior. And obviously, it seems that likely not just this week, but in the past couple of years, that was the way that they game played out what was going to happen. And I'm reminded of what happened during the Cold War. And during the Cold War, the US and Russia entered upon this nuclear arms race, and they both built enough nuclear bombs to destroy the world like many times over. And the question was like, was that needed? Right? And and there are also thoughts of, well, the U.S. did that in order to bankrupt the Soviet Union. Maybe so. I don't know. But the point was like this race between the U.S. and China that's being framed for AI supremacy is very real. This video is not AI. If that's what you're thinking, the links in the thing. This video is not AI. I'm not AI either. Like blink, 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 blink. An AI can't blink with one eye yet. Did you know that? So, okay, Seep, are you an AI? Listen, the race is very, very real. You could see it from the amount of spending taking place within the United States and within the Mag 7. You could see it in the earnings of NVIDIA. You could see it in the push and move towards energy. Now, is this the end of the AI bubble? Watch the video. No. Yeah, that's a whole nother like, first of all, this is not AI. Your discernment needs to be a little bit clear, but we're going to need proof of life at one point in time, right? Like, how do we know? It's going to get much harder to figure it all out. But that, again, that's a distraction, and unfortunately, I have to, because we started early, be really focused here, because there's way too much to cover to today, and that's why our sessions are so long. That's why our sessions are so long each and every day. But there's a lot to get into today, and this was just the starting point. And the thing is that if the government needs to backstop this AI race, like the Chinese government, you could say already is, they're providing the energy sources to power whatever data centers are needed. Um, um, Sorry, I'm just caught up in the comments, but it's all good. It's you guys are way too interesting not to be. Is the if the government, like, all right, open AI is too big to fail, whether it is or it isn't. More bigger question is the eventual progress of this whole situation that one way or another the U.S. government needs to come in like, first of all, that's happened before, whether or not it's from the railroads, whether or not it's in World War II, what it looks like and how it looks like, that's not neither here nor there. Those are details. The inevitable conclusion is likely going to be that's exactly what happens. That yes, the government, one way or another, whether it's through OpenAI or how, comes in and does, in a sense, backstop. Will there be windfall profits where OpenAI is paying the government money for that? Likely. Is the reason that Warren Buffett is holding so much cash for the last 5 years, completely left behind. Back in 2020, people like Warren knows something. He's sitting on $160 billion in cash. Markets crash, Fed comes in, floods the system, and Warren doesn't put any to work. Here we are again, or is it after he was bailed out, or after he participated in the bailout of Ford and was backstopped by the government? Is this part of the details of what he needs to do to support the treasury system? I don't know. Either do you. But anyway, this is like this is not the end of the AI bubble. This is just beginning the next phase. And we're not even there. Like, when the government eventually, and again, this was known a year ago, which is when it was made public, which means that it was known before then, and this was already played out. And wow, he would, if he was an AI, he would be the largest fund manager of an AI, a multi-billion-dollar fund. That would be crazy. Um, Dude, my favorite tweet. LOL, can't take you serious with videos like that. I'm out. See ya. Dude, see, the best thing in my, great, fantastic, bye. Man, I just feel like KC was so foolish to think that that's an AI video, that he couldn't take being corrected and just had an emotional meltdown and left the room. That's great. um Man, I miss getting a little bit of wreck, and maybe we got too serious, and I think that here we go. So this is the point being here. Like, when this eventually happens, this is not the top of the AI bubble. A bubble it is. And the bubble, when the government, it'll be just the next phase. And the government, man, they got a printer behind them. They got a printer behind them. And throughout all of this bubble, and don't forget the massive amount of contribution to the GDP that this AI bubble is adding, is, the Fed is going to be easing into this bubble. The Fed is moving right now from QT and will be moving to organic balance sheet expansion. That's not QE. It is, in a sense, easing, and it's a form of QE, and it's balance sheet expansion, more importantly. But at some point after, the Fed is going to actually be forced to move to actual outright easing. And when that happens, they're going to be easing into one of the biggest bubbles of all times. Guys, does it end badly? Eventually. We're not even close to the end badly stage, right? And a lot of people, unfortunately, might get left behind. Guys, by the way, prediction markets are really pricing in right now that the Supreme Court, after yesterday's opening hearing, are likely not going to side with Trump. I don't know the ramifications for the market if they were not to. I'm not sure right now, as the markets here are under down 2%, if that has anything to do with the tariffs or if it has to do with um, Powell keeping us guessing, or what the situation is. But we're going to need to follow that closely ahead. The dollar is, and what would happen with the dollar if the tariffs were taken off? Don't forget that the dollar corrected extremely hard right over here, that leg down on the implementation of the tariffs. It was as if the US dollar devalued to make up for a large portion of that. Have to watch that. I'm not sure. Um, it's unbelievable how, like, he's so brilliant, and the way that it's almost like a quirk. It's funny, like, as the interviewer is talking and he's taking in the interviewer is quite intelligent himself. As he's talking and he's listening, he keeps going, uh-huh, 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 because he's actually listening to what's being said. And as he's not thinking about what he's going to say, he's listening to what's being said, and at the same time being able to, like, absolutely brilliant. Brilliant, brilliant, brilliant. Um, the problem is once the Fed begins easing into a bubble, we're going to see, obviously, the question is about inflation. It's such a hard question to answer in so much as this. Reacceleration in this particular moment, is that going to add to inflation? Well, we have, obviously, right now you're seeing utilities, from my belief, really factoring in the uptick in the way CPI is calculated through true inflation. But what we're missing here is that likely shelter outside of outright QE, outside of a massive devaluation. We likely see housing over the 12 months and further out continue to correct with rates that are elevated here. And when I say rates that are elevated, obviously a lot of people believe that their house is worth a certain price. When they go to sell it, there are no buyers at that price because of mortgage rates being as high as they are. Their pricing power is different than the people who bought those houses. And we have a lot of supply on a lot of the markets right now with not as many buyers, and those buyers have more choices, and those sellers are reducing prices and coming down. And eventually, it's a very slow moving market, but eventually, like, we see a further correction. And if that happens, then that's going to show up in the CPI. This move in technology is actually very deflationary. The tariffs have been deflationary, right? And not inflationary. Powell completely missed the ball. And if the tariffs are taken off, that likely becomes inflationary. So that's something for us to consider and watch out for. If the tariffs come off, that's likely inflationary, and that's going to be something to watch out for. Now, assuming the tariffs remain on, and that's a wild one, right? If prediction markets are not pricing that in or strongly, and but I can't imagine that the government is like, oh, okay, they'll come up with something else. I'm pretty sure of it. And At least in maybe until these trade deals are worked out as well. Um, I saw Zillow is providing mortgages. No, Robinhood is providing mortgages at like 5.9%. From what I've seen. Um, AI is completely deflationary. So we have these inflationary aspects, reacceleration, being met with deflationary force. And then ultimately, nothing has changed, in my opinion, when the Fed has to move towards that outright easing. that's going to be massively asset inflationary, right? Which means prices of assets are going to go up. The discrepancy, the have and the have-nots, you're going to see a greater, a greater move, and of course that trickles down. And when assets become inflationary, like if you look from 2008, the great financial crisis and the birth of QE, to 2020, before they flooded the system, that like a lot of people didn't see that as an inflationary period. They're like, no, inflation's 2%. There's no that was a massively inflationary period, right? Why? Because the dollar devalued significantly. What you could buy in 2008, you could not afford in 2020 with the same amount of money, and it was hidden through things like shrinkflation and whatnot. A lot of people, like I've had conversations with people right before the 2020, and they didn't think that there was inflation. Your purchasing power really declined during that period, whether you believe it or not. It became apparent after not only Powell flooded the system, but through the government's direct handouts. Now, is eventually, because we are going to see less and less jobs, unless I'm not one of those people who thinks that AI is going to open up this, you know, uh, it's gonna create jobs. I think it takes away jobs, and a lot of them. And the problem is, what about UBI, and is that going to be inflationary? And I imagine that deflationary forces is a lot greater. So I guess rolling this back and not very clear. Um, so we're looking at a massive force. First of all, there is an AI race happening. It is causing a bubble. That thing, like we're in early innings. The government hasn't even began to backstop, which eventually is likely going to happen. And then when the government backstop, you think it's over, or that's just the next chapter. And then throughout all of this, eventually the Fed is going to return to not just stopping QT, not just lowering rates, not just expanding their balance sheet. They're eventually going to need to return to outright easing, and when that happens, inflation's already going to be elevated. We talked about eventually taking out that peak of 9.1 CPI. And that's on after they return to the outright easing that likely happens. But either way, this is going to be incredibly asset inflationary. People looking for a crash in 2026. Anyway, Sebastian, I someone shared with me yesterday that Portugal real estate is up 24% in the last year. And I think like 50% in the past X amount of years. I don't know if that's 4 or 5 years. Uh, you know, and do I think that's going to continue? I'm not familiar at all. I don't know. I don't know. I can't say one way or the other. Um, Now, I saw someone yesterday, a real estate investor, and the real estate investor was like, um, you know what? I'm out of real estate. I'm putting, I'm putting my money into bonds. And he's basically, it's a risk-free trade. Put 3 million in. I'm already up like $100,000, and over X amount of time, I'm gonna make X money. And man, this is like in the near term, over the next year, is it possible we see something like the 10-year breakdown from here? Yeah. And if that happens, could we be headed towards 3.5%, or even lower? Yeah. When the Fed returns to outright easing, and or the real reacceleration is happening, and we are seeing inflation, beginning to tick up, how soon do bonds begin price, Do I think that 5% here is the top, or that we're going to see higher? I mean, I think that we're going to see higher, and I don't know how to time that. I know how to draw lines and be able to follow, to follow what happens, but I don't know. I think that that's going to be, could you, if you're putting on that trade, could you imagine not hedging it with buying Bitcoin? But anyway, I think that the assumption there was that just as a lot of people over the last few years got themselves into mortgages, that they were told, "Oh, don't worry, you're just gonna be able to refinance." And a lot of those were interest only, and they're about to be repriced, and they weren't able to refinance, and they might not be able to sell them, and they might need to sell them at a significantly lower price than they bought them. And I do think that in the US that we're going to see, outside of, if there's a massive, like, if the Fed is forced tomorrow to return to outright QE and flood the system, I think housing makes a massive leg up because of the devaluation. And then, you'll own nothing and be happy. But I do think that, if things progress over the next 12 months, as expected, without any type of unforeseen event, that likely we're going to see, housing prices come off. That's going to give cover for the way CPI is calculated. It doesn't mean that, our costs are not going to be rising. That's interesting. Good morning. Anyway, here we are. I want to get into Bitcoin in 1 second. Cardano still open on the short side, minus 19%, and just safe and protected. Bitcoin bull runs out of the market. Nvidia here moving towards a stop loss. Tesla took a stop loss. We talked about that yesterday on the opening, and then Tesla wound up being up 4% on the day. That was just unfortunate. Nvidia giving back now was up 10%, and then FNGU has since stopped out, full stop loss. So now the chop begins, and so far, MicroStrategy is covering, right, with that hedge that we had on, and hedged in uncertainty is good. You don't know which way it's going to resolve, and whether or not we're able to, to close this one covering for FNGU and Tesla remains to be seen. It looks like markets now are under pressure. Jumping over, and there we are with MicroStrategy still open. It looks like Nvidia here right now has a close pending long, and we just took a stop loss on FNGU. Enter short pending on Ethereum. Cardano holding 19%, and Bitcoin bill runs is out of the market and keeping us safe as Bitcoin is testing $100,000. It was TXMC this morning, just looking, I think, the length of these cycles and how they've coincided with like the past 2 4-year cycles. But I was focused in on price in previous cycles, testing the previous all-time high. And we know last cycle that it was the first cycle for price to trade lower than the all-time high. And then we used the previous cycle ceiling as a way for us to pick the very bottom of the Bitcoin bull run. I understand that some people didn't, like most people, like I know that we were very early, 17,250 December, calling the Bitcoin bull market breakout. I understand that a lot of people didn't become bullish till 2023, late into it, 25,000 or so, or something like that. And I understand that a lot of people right now think that 2026 is bear market. And it could be. I mean, who knows? But it also depends on what that bear market looks like. I've said things that, like, listen, that first of all, that the cycle high, when measured from the halving, is going to be closer to 2028 than 2024. And nothing's changed there. And what happens if we have a drawdown? What happens if we were to test the previous cycle high. And here we have the November high. It's about 45% off of the high. First of all, if that's happening, 55,000 Bitcoin is cheap. We're not even close. Still holding our sweet spot accumulation but above the orange line. And right below, you could see this is the test into March. And then right here, saved by the court ruling, allowing for Grayscale to roll over their fund into a spot Bitcoin ETF. And since now we've seen a different structure takes place as different participants are here. What's happened this year is, I mean, is Bitcoin even up on the year? Barely, right? Bitcoin on the year from January 2025. There's January 1st. The opening price is 93,000. So Bitcoin is up on the year, 93,000. 8%, if I'm doing that right. And yeah, tough year, but extremely bullish in so much as that we've seen the OG distribution taking place. And those really early adopters, some in really large size, we've seen billionaires made in fiat terms, and I'm sure they hold more Bitcoin. And it's healthy to see the market moving from people willing to sell and the fact that it's able to be absorbed, the massive amount of selling that's taken place, because those sellers, once they sell, they, like the supply they have to sell is now being transferred into what appears to be participants that are looking to hold for the long term, and probably longer than the ones who sold it to them, which was, roughly 7 to 10 years. So very bullish. What happens if we have a massive breakdown, 40%? Like, I think I've been extremely consistent that why I don't expect a 40% drawdown unless we break out to the upside of the channel. Here's the channel over here. If we broke out above this line, I think we see accelerated price behavior, and that leads to at least a 40%. Could be anywhere between 40, 50, even up to 60%, if we depending on the acceleration to the upside. But a 40% for me would be probable if that were happening. And when that's not happening, right? We didn't have a breakout to the upside. 30% pullback over here from where we are is bringing us down towards around $86,000, well within range. 40% pullback into what is a trend line that has not broke this entire bull line. I mean, is that a bear market? Some people might say if a bear market historically has been Bitcoin trading off anywhere in a range from 76, 77 to 85%. Forget the 92%. That was early innings. And a duration of 12 months. This was not a bear market when Bitcoin came off 30% during April, February and April. But if this had lasted 12 months, would it have been? For me, a bear market is something that's going to be lasting 12 months in duration and with a drawdown greater than 60%. I don't see it at all. A lot of people do. How do you know when to buy and when to hold? Right? Like if you're asking some of the top YouTubers out there, they think that 2026 is a bear market. Have you sold already? Do you sell? What happens if you sell and then into 2026 you're trading above 130? Or do you wait for the next leg up? And if we have a leg up into 130, 135, 140, are you distributing into that because there's a bear market coming? Or what happens if that doesn't happen? And then what happens if you're into a 50% drawdown from the top, but you didn't get that last leg up? How do you know when to, again, most didn't know when we bottomed here, and most noticed we bottomed much later after having a bearish posture for about another 6-7 months at least, and now calling it top. But when's that top? Is it after that potential next leg up that comes into the end of the year? Has it already happened? What happens if we hit 130 and you sell and then you're out in the future? You know, it's hard to say, and the more you look at it from that unbiased approach, the further you realize that there's no way you know when is the very bottom and when is the very top, and it's been very trying. If buying over here, most people are attracted to Bitcoin towards the top. $60,000, $55,000 Bitcoin's cheap. You're buying 55,000 Bitcoin in 2021, and you're up 87%. You know, this is over a 5-year period. It's very tough. The structure of the market has definitely changed. Here you could see the volume, the Bitcoin historic volatility. And while we're looking at that, guys, I went over. I have to get to the funeral. I'm so sorry. I'll just keep going forever with you all. I have to go. I have the funeral to get to. Tomorrow, I'm going to pick up in this conversation right here on this slide, and we're going to talk about the changing nature of the market, and we're going to talk about what that means for us today and going forward. So until then, have a beautiful day, everyone. God bless you. You are blessed. I'll see you all tomorrow.